Hello, everyone. Thank you for joining us on this Wednesday, and welcome to this educational presentation where today I want to talk to you about the perfect strategy for trading a down market. If you've noticed the past couple of weeks, we've been in a pretty serious down market here across the board. The markets have tried to rally, but they haven't had much bounces. So it makes it very difficult for some traders. So I'd like to start out by sharing with you what I learned trading on the floor of the stock exchange, because as you know, I started my career on the floor of the Pacific Stock Exchange. I was on the floor for 16 years, and 9 of those years, I was a specialist where I made markets in roughly about 50 or 60 stocks. Now, here's a picture of the old floor. In fact, I'm in this picture as we look here of the Pacific Stock Exchange. Now, when I first started in the mid to late 70s, the market had been going up. And it was fairly easy to make money because, as they often say, everyone is a genius when the market goes up. But then in 1987, we had the crash, and a lot of traders lost tons of money, hundreds of thousands, if not millions of dollars in one single day. But there were a few traders, my mentors, who happened to actually come out unscathed. In fact, they did very well during the crash. They made money. So here's what I learned from my mentors when I asked them, how did they trade so well during the crash? And here's what they taught me. They said, Steve, the reason is because the market is always giving you a clue as to which direction it wants to go. You see, that's the trouble, and why most traders fail is because we're looking at the market direction from an outside source, either some guy on TV, some convoluted indicator, or some economic report that's supposed to tell us what the market's going to do. But if you learn how to listen to the market, it's actually telling you all the time what it wants to do. The only trouble is we're never trained to listen to the market. We're always trained to listen to an outside source. But once you learn how to listen to the market, and it's actually far more simple, then it really is simple to trade in sync. And so regardless of the market's going up or down, you can be in sync with that market. So this is what we're going to be talking about today. Now, for example, let's look at this chart right here in INSP. Excuse me. Most traders right off the bat, listening to either some guy on TV or in a chat room, would say, well, Steve, this is in an uptrend, right? Obviously, we're making higher highs, higher lows. The earnings just came out. They're good. The economy is good. I like where the markets are going, right? All right. This is what determines what they think the market is telling them. But here's what I'm going to share with you today. I'm going to share with you two edges. Now, the first edge identified that this actually was in a downtrend. It wasn't in an uptrend at all. And the second edge generated actually two sell signals based off of a strategy I'm going to be talking about today. And these were the sell signals right here. So this was just about 3 weeks ago, the beginning of September, when everyone thought the market was going straight up. And then look what happened. You could have potentially captured 50 points coming into last week. Okay, so this is what we're going to be discussing today, the perfect strategy for trading a down market as we've been experiencing. And everything you'll see today is displayed coming from the PTS Primo charting platform that I developed with Pro Trader Strategies that actually teaches you how to trade and actually teaches you how to listen to the market. So welcome once again. My name is Steven Primo. I am the president and founder of Specialist Trading. If you're new to my presentations, we really are a little bit different from other webinars you may have attended, in the fact that we're not going to tell you what we think the market's going to do. We don't know what the market's going to do. No one really does. Everyone just has opinions. We don't tell traders what the perfect stock is to buy or what the perfect stock is to sell. We don't tell you what the perfect time frame is. What we are is first and foremost an educational company. That's all we do. We simply educate traders around the world, and I'm happy to say in over 115 countries in every state in the United States, all of the tips and techniques and strategies I've accumulated in my 46 years of trading now, so that ultimately we can make you a consistent trader, because that's what it's all about. We want to be able to have you not just have a couple of good months, but possibly a couple of good decades, so that you can be a consistent trader for that entire time. And so I'm happy to say that all of our teachings are extremely consistent, and you'll see that attention to detail in today's class. Now, before we begin, we are required to share this with you, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results using these two edges as well as this strategy, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also remember that since we are an educational company, all examples are strictly for educational purposes only. Now, another way to get education on a daily basis is to follow us on Twitter or X. Take your pick, whatever title you like to choose there. There's our handle at SPCLSTTRADG. I would recommend copying that down because we post anywhere from 6 or 7 different snapshots of techniques or strategy signals that have been generated that day. And also we post bits of financial wisdom. So there's lots of great free education on a daily basis. So please feel free to follow us on Twitter. Now remember, we are, as I stated in the opening statement, different from other webinars in that we are simply an educational company. And our goal as an educator is not to force feed you signals, not to tell you what we think the market's going to do or tell you what to buy or sell on a daily basis. Our goal is simply to teach you how to trade with the specialist edge. Now, when I was struggling some 46 years ago, when I first started, this was the edge that my traders taught me, my mentors, I should say, taught me. They were traders on the floor of the exchange, and they turned my trading around. And I truly believe that is what has sustained me for the past 46 years. So hopefully I'll be able to do the same for you. Now, before we begin, we have a good crowd here today. Please wait till the end of class to ask questions. I found in the past that if we stop at every slide, we're going to be here far too long. And oftentimes your questions are answered in the very next slide. So if you do have a question, please wait till the next slide, or I should say till the end of the presentation, and I promise I'll get to each and every one of them. The only question I will answer is the most common, and that is this being recorded? Yes, it is. We record all of our webinars, so each and every one of you will be sent a link to this recording. You can watch it over and over again at your own leisure, okay? All right, with that stated, let's begin. And what we're going to be talking about are 2 edges, first of all, that make up this strategy. Now, these edges are extremely powerful, but you're going to not believe it when you see how simple they are. But if there's one thing I've learned in my 4 decades plus of trading, it's that the simple things are the most powerful. And that's why most traders really don't have that consistency, because we've been taught to look at the most complicated, the most convoluted logic, things that we don't understand. They must be valid, right? But in all actuality, those things hold the least consistency. It's the very simple things that work the best. So here's the first edge, and you'll see how simple it is. If price is below the 50-period simple moving average, well, then the overall trend is down, okay? As we see here, since we're looking for a down market, well, what do we want to do? The first thing we want to do, regardless of what we think the market is doing, looks here like there's no trend, right? In fact, someone could say in a chat room, well, there's major support right there. But let's ask the market. Remember, we want to listen to what the market's telling us. And if we apply the 50-period moving average, we see that the majority of price bars are below the 50. So the market, not some guy in a webinar, not some guy on TV, the market is telling us the overall trend is down. And if the overall trend is down, being below the 50-period moving average, well, then we do not want to be a buyer. That means the market is telling us it wants to go lower. So why should we stand in the way of that? That's why traders lose, because you're out of sync with what the market wants to do. So if you're in sync and you listen to the market, well, it's easy either to step aside or to go with it, go short the markets, okay? That's edge number 1 for trading a down market. Let's go to edge number 2. When a bar closes in the bottom 25% of its range, the market is saying, I want to go lower, and this is on the short term, okay? So if you're not sure what we mean by the bottom 25%, let's look at this down bar right here, okay? I specifically made it generic so that you didn't think it had to be a certain stock or a certain market, certain time frame. It makes absolutely no difference. But what we're seeing here is that we want to find out where the close is, in which quadrant, okay? So we divide this bar by 4 separate but equal parts. And if we close in that bottom 25% right here, then the market is telling us that it wants to go lower on the short term. So think of it. We now know that the market wants to go lower on the overall term because it's below the 50. And now we know on the short term, it wants to go lower because it closed in the bottom 25%. So now this is really powerful. Think of it. We overcomplicate things by trying to find the same way by looking at different time frames, right? How many classes have you taken or webinars you've gone to where they say, well, in order to find out and get a signal on the hourly time frame, you have to see what the trend is on the daily time frame. Or if you want to see what to do on a daily time frame, you have to look at the weekly time frame. For me personally, now, once again, I'm not telling you what to do. You can trade however you like. But in the past 46 years, I have found absolutely no consistency in looking at two different time frames to make your trading decisions. It's a waste of time, in my opinion. Okay? There's no consistency there. In fact, in my opinion, it's an urban myth. All you need to do is on the same chart, the same time frame, apply a 50-period moving average and look to see if price closes in the bottom 25%. If you do, and we find that, well, then you have a very strong indication that the market is telling you it wants to go lower. For example, as we look at that older generic example, price is below the 50. So we know that the overall trend is down. We are in no way going to be buying anything. But now we want to look for bars that close in the bottom 25%. What do we find right here? Here's a bar that closed at or near the bottom. And look what happened, okay? Now, this is not enough to say, well, I'm going to just trade off these two things, okay? These are very important pieces of the puzzle, but we need a little bit more information in order for us to have actual structure, in order for us to have an actual strategy. But these two pieces of the puzzle make up the first two rules, the preliminary rules, to a strategy I've been trading for over 46 years. And this is strategy number 4. This is a strategy that's perfect for trading downward markets. Let me share with you some of the highlights. It's a pattern recognition strategy. So we're looking for a pattern that repeats itself in any market and in any time frame over and over and over again. Now, it was originally designed for traders looking to catch quick momentum. So when I started trading this on the floor some 4 decades ago, I was in and out in 5 minutes. But we've developed ways, we know not everyone wants to trade that way. We've developed ways to stay in the trade for hours, days, weeks, even months if you'd like, all right? Now, it only uses one indicator. You already know what that is. It's the 50-period simple moving average. So we're looking for a pattern that repeats itself. So guess what? You've already got 2 of the rules to strategy number 4. These are the preliminary entry rules. Now, the advantages to this method is that it's extremely consistent. Now, consistency does not mean that every trade is a winner. It doesn't mean that, well, Steve says that the majority of these trades are winners. No, that's not what consistent means. Consistent means that if you do have a loss, a consistent method will be able to recoup those losses, often on the very next trade. So it's extremely consistent, kind of a 2-step forward, 1-step back approach. It makes you a part of the process. Once again, remember, most traders fail because they take themselves out of the game and then listen to some guy on TV or in a chat room. Well, we don't have any of those things here at Specialist Trading. We don't believe in chat rooms. We don't believe in giving out signals on a nightly basis. Those are things for you to define and to decide upon. That's why it makes you a part of the process. But lastly, it's designed to be as simple as possible. Remember, there's only 4 rules. You've already got 2 of them that I just gave you. Remember, the simple things are the ones that have the highest level of consistency, in my opinion, not the most convoluted, complicated systems that you have no idea what they're based on. It's the simple things that work. Okay, let me share with you some recent examples in the current down market and show you how simple it is to apply this process. And we're going to go over those 2 first rules that I explained to you. And everything you're seeing today is displayed coming from the PTS Primo charting platform that I developed with Pro Trader Strategies, actually to make trading simple, because everything is 1 click away. There's nothing to format. There's nothing to go searching for a specific indicator. It's 1 click away right there for you. All right, let's look at this example in TGT, Target. This was in August, so this was coming into September. Now, some traders would say, well, Steve, gosh, there's not a lot of information there, but that chat room I went to says that there's major support. So we should be buying this, right? I mean, this is really good information here. So this is the bottom and I want to be buying right here. Okay. Well, where did we get our information? We got it from some guy in a chat room or some guy on TV or some earnings report. What is the market telling us? Well, on our platform, it's as simple as clicking on strategy number 4, this green tab here. In the drop-down menu, click on indicator. Now here we have the indicator, as we can see, the 50-period moving average. Now make it look as if we're oscillating above and below, but look at the majority of closes. They are below. We only actually have 1 close above. But it really wouldn't matter. All we need is for the rules to be met for 1 bar. But it doesn't hurt when we have a lot of the bars closing below. So the market is telling us pretty sure that the overall trend is down. And then click on strategy 4. and we look for those bars that closed in the bottom 25%. We have a number of them here, but that also meet the rules, the remaining rules of the pattern. So we click on signal arrows, and here is a valid strategy number 4 sell signal, okay, right here. So we know that this is a valid sell signal to go short rather than being support. And look what happened. The stock fell 20 points. And in fact, I think it's even lower now after I took this snapshot. But this was coming into last week. And here's the beauty about trading strategy number 4. If you miss that signal, look at all the other ones it generated, giving you another chance to get back in, okay? Let's look at ILMN. Once again, most traders would say, well, Steve, this is a sideways market. I don't want to do anything because look at when I buy, it goes down. And when I sell, it goes back up and so forth. So I'm going to wait for it to break out one way or the other because it's not telling me anything. It's telling me it wants to go sideways. Well, sure, it may appear that way, but what is it really telling you? First thing we do is apply the indicator. On our strategy tab, click on strategy 4, click on indicator. And as we can see, we are well below the 50. So even though it may appear we're going sideways, we are below the 50. So the overall trend is down. The market's telling us that you don't want to buy here. Now we look for bars that close in the bottom 25%. There are a number of them here, but they also have to meet the remaining rules of the pattern. So we click on strategy 4 again, click on signal arrows, and we have 1, 2, 3 sell signals right here towards the high of that sideways rangy market. So even though it took a while, you would have had to wait for a bit. Eventually it did kick in and the market fell 30 points coming into last week. And if you miss those sell signals, guess what? 2 more right here. Let's look at another example here in DXCM. Now this is a little bit more advanced for more advanced traders, but it still follows the same principles. We apply the 50-period moving average. And most beginning traders would say, well, Steve, I'm not going to go short here because we only have 1 bar closing below, but the majority bars are above. So the overall trend is up, right? Well, sure. But this is a little bit more advanced trade for more advanced traders because it closed below the 50. It closed in the bottom 25% and it met all the remaining requirements. So it was a valid sell signal. Once again, a little bit more advanced, a little bit more risky, but that's okay for the more advanced traders. They could take this trade. And they could have potentially made 35 points. Now, if you didn't feel comfortable taking that, you had 3 more chances to take it where it was well below the 50-period moving average. Let's look at CAR, okay? This is Ava's budget. Once again, kind of just going sideways, but what do we have here? We have price above, a close below, price above, another close below. So it's kind of oscillating back and forth, another advanced signal, but this time, once again, you could have taken this and look what happened. 40 points to the downside coming into last week. Now, this was all roughly about a month ago that you could have taken advantage of all of these. So many traders I've been talking to that are prospective students to join our members club, they'll say, well, Steve, yeah, but you know, I'm getting killed right now. I didn't know the market was going to come down. Well, we didn't know either. But the market via strategy number 4 was telling us that there was these sell signals all around. So in other words, the market was telling us in advance it wanted to go lower. Here's an example in INSP, okay? This is what we looked at earlier, I believe. We thought, well, this is an uptrend, right? It's got to be an uptrend. Look at this classic uptrend going higher. But once we add the 50-period moving average, what is the market telling you? The market is telling you, well, sure, we may be moving higher, but in an overall downtrend. So in all actuality, this is a selling opportunity. This is not a buying opportunity. But this is why most traders fail, because they see this as an up market. And that guy on TV says, hey, this is going higher. You want to get along this. It looks like it's going to make new closing highs. But our students knew not to buy this and to look for a strategy 4 sell signal. In fact, there were 2 generated because potentially you could have captured 50 points coming into last week. See, trading is really simple when you get out of your own way. You see, it's the easiest thing in the world to overcomplicate your trading. Anyone can do that. You can be trading for 2 weeks or even 2 hours and pile on more and more indicators, more and more fundamental news, more and more requirements for your strategy or your system. It doesn't take a lot of character to do that. Anyone could do that. But it takes a lot of character to strip those things away and say, you know what? I'm not going to rely on that stuff anymore because it really doesn't help. And I'm going to just keep a few things and see how consistent I can be. It takes a lot of courage, but once you go on that way, in that direction, you'll see that you're much more consistent. Here's an example in IDXX. Once again, the stock has been rising. This was coming into September this month, but it was rising below the 50-period moving average. It went above, but closed in the bottom 25%. A sell signal was generated. 70 points coming into last week, and 2 sell signals were also generated last week. Now, remember, how you decide to trade is entirely up to you. Not saying that you have to short the stock. I know a lot of people don't like to go short stock or don't have the funds to do that. You can buy puts. You can buy some type of spread strategy, option spread strategy with a bias to the downside. It's entirely up to you. Our job as educators is not telling you that you have to buy puts or short the stock or do this or that. How you enter is up to you. We're just teaching you high probability areas in which to take the trade. Okay, another little bit advanced kind of a scenario here. We closed above for 3 days, but then this day we just barely closed below, but it met all of the requirements. This was an AVGO just about 3 weeks ago. 80 points coming into last week, okay? See how simple this is? Now, we know that not everyone trades stocks. So let's see how this can be applied to different markets and different time frames. Here's an example in the Canadian dollar. Here's a 4-hour chart of the Canadian dollar just a few weeks ago. As you see, price at this point on a 4-hour time frame crossed below the 50. So the market's telling you it wants to go lower. And right here on this bar, a strategy number 4 signal was generated. All the requirements were met. You see, this one closed on the bottom 25%. So did these two, but they didn't meet the requirements. But this one did. And look what happened. In the next week, it could have potentially captured over 17, or I should say possibly $1,700 trading 1 unit, because it potentially captured 175 pips. Now that was a 4-hour chart of the Canadian dollar. Here's a daily chart of the British pound. Same concept applies. Nothing changes because we changed markets or time frames. At this point, we were above, and now we start to get closes below. There's a valid sell signal, another one here, and look what happened coming into September. Over 500 pips potentially you could have captured. That's thousands and thousands of dollars per unit. Let's look at a 10-minute time frame of Tesla. Okay, this was just last week, I believe last Friday. Okay, obviously it wanted to go lower because it was below the 50-period moving average. Just because we're looking at a 10-minute chart doesn't mean we can't look at the 50-period moving average. You don't have to apply a lot of indicators. All I look at is a 50-period moving average. That's all I have on my screen. And we have a number of bars here that close in the bottom 25%, but these were the ones that the signals were generated on. And look how you could have taken advantage of this. Potentially in just a couple of days, captured 10 points in Tesla. All right, that's an intraday chart. What if we look at a 30-minute chart? Here's an older chart of the E-mini futures, okay? Sell signals are generated right below here, and look at how the market went straight down after that. 70 points, okay? That's roughly $3,500 per unit. Here's an ETF, the QQQs that represent the NASDAQ, okay? Sell signal was generated just a week or so ago. This represented thousands of points in the NASDAQ index. And then lastly, we can look at a weekly chart. Now, this is Peloton going back about a year or two when it was trading at over $100. And look what happened. A sell signal was generated right towards a little high of this bounce. And if you missed that, another one was generated where potentially you could have captured 85 points. So you see how flexible this method is. You can apply it to any market, any time frame, and even any direction. So let's recap what we taught you today. Firstly, regardless if you want a trade strategy for and become a student of mine, I would highly recommend applying a 50-period moving average to any chart you're looking at. I don't care if it's cryptos, I don't care if it's futures, I don't care if it's commodities or stocks. I don't care if it's a 5-minute time frame or a monthly time frame. Always have a 50-period moving average on your chart. And if the majority of price bars are below, the market is telling you it wants to go lower. It's that simple. So you never want to be out of sync with the 50-period moving average. We tell our students never to buy anything below the 50-period moving average unless you're a little bit more advanced or you have more risk parameters, okay? Now, once you see that price is below the 50-period moving average, you want to look for our top bottom 25% rule. And that's looking for charts, bars, I should say, that close in the bottom 25%. Because if you have any kind of chart, any minute, any time frame, close in the bottom 25% and it's below the 50, well, you have a high probability that it's going to go much lower. Why? Because the overall and the short-term trend are now in sync. Remember, you don't have to look at different time frames. You're always free to do that if you want to, but why overcomplicate things? All you need is one chart with a 50-period moving average and looking for bar charts that close in the bottom 25%. Now, these two rules, these powerful edges, make up the initial preliminary trading rules of strategy number 4, a method I've been trading for over 46 years. I continue to trade to this day. I traded this morning. I trade the E-mini futures and I traded intraday, and they make up strategy number 4, and they can be applied with ease, as you just saw on the PTS Primo charting platform. Remember, strategy number 4 can be applied to virtually any market, any time frame, and any direction. As we close here, I just want to leave you one more time with what my mentors taught me. Not some guy on TV, not some economic report, not what's happening globally or politically, but the market, the chart in front of you is always giving you a clue as to which direction it wants to go. Once you learn how to listen to that, because it's much more simple, it's so much easier to listen to the market than it is to try and figure out if the earnings are positive or negative, if an economic report is good or bad. Listening to the market is cut and dry. Just the way it is, price is below the 50, well, the overall trend is down. There's no two ways about it. If price is above, the overall trend is up. It's really simple. So the market's always giving you a clue. The only trouble is we're never taught to listen to the market. We're always taught to listen to an outside source. And if that works so well, because when I first started trading over 4 decades ago, I was taught the exact same way. So if that works so well, why is it estimated that 80 to 85% of all traders fail? Well, obviously, it doesn't work that well. So get rid of using tired, worn out urban myths to make your trading decisions. Learn to listen to the market. And the best way I feel to do that is by trading the first strategy that I ever learned from my mentors, strategy number 4. Okay, so ask yourself, do you think strategy number 4 can help your trading in a down market? What if we continue to go lower and lower? No one knows how low the market will go. No one knows if a bounce is the beginning of an uptrend or if it's just a pullback and should you get short again. So here's a great way to help you during a down market. We have a great offer for you attending today. We're going to offer you strategy number 4, our most consistent strategy of all. All right. Now you're going to get instant course access, detailed instruction. You're going to learn all the different ways to enter, all the different ways to exit, and all the different stop placements. Because as of right now, I really didn't share any of that with you because it wouldn't be fair to all of our students around the world and in the United States that have purchased strategy number 4, one of our top selling methods. But once you become a student of mine, you'll learn all these different things. You'll get the automatic buy and sell arrows, complete course rules. Remember, you can apply to any market and any time frame. But here's the best thing. We're throwing in the special bonus, okay? You're going to get the PTS Primo charts absolutely free for 6 months. So everything you saw today, how easy it was to click on the strategy number 4 signals, automatically see the up and down arrows, you're going to get that automatically on the PTS Primo charts for 6 months. That's a nearly $900 value, absolutely free. So with that, you're obviously going to get strategy number 4, and you're going to get, the ways to click on the up and down sell arrows, but you'll also get a lot of other things that are included that you won't find on any other platform, because these are things I've accumulated in 46 years, and many of them I've taken from my years on the floor. Things like the enhanced buy sell line features, the strength of trend tool that we developed with Pro Trader Strategies that has an uncanny ability to tell you when a trend is either running out of steam or has a lot more room left to go in one direction. You'll also get auto-generated exit levels. These are just one of the different exit techniques I teach you, but they're auto-generated on the platform. So you won't find it anywhere else, and you'll see where these exit levels are. And this comes with over 90 of the most prominent technical indicators along with personalized tech support. But here's what I'm the most proud of. It's the signal scanner that I developed with Pro Trader Strategies because it's so simple. I've said this many times, so I'm not afraid to say it. I will not mention the names of the platform, but I've traded with just about every platform you can think of. If you're trading with it right now, I've already traded with it and I've experimented with it. And one of my pet peeves is the ability and the ease of use of signal scanners. Some of the platforms, I won't mention their names, but it has taken me literally hours, if not days, to run a scan on a certain type of technique. And it's just so complicated and just so ridiculous to try and put together that was one of the reasons why we developed Pro Trader Strategies charts, Primo charts, because we wanted to make it simple for you. For example, let me share with you how simple it is to use our scanner. Remember, on that green strategy tab where you clicked on the indicator, well, now just go down the list of options and click on scan, okay? So what you'll see is a page like this appear. All right, this is the scanning page for strategy number 4 signals. You go over to the left-hand corner and click on load symbols. And we provide you with symbol lists. You can decide which ones you want, anywhere from all the major indices to futures, to currency pairs, to cryptos, to ETFs. It's just whatever one you want. You can actually make up your own list of stocks you'd like. You can make up a basket. And then click them on and they'll appear. I believe in this case, this is the NASDAQ 100. Now, once they appear, all you have to do is click scan. That's it. That simple process. And in a few minutes, probably less than a minute, you'll see a series of either green or red horizontal bars appear. Okay. Now, these bars represent either a buy signal or a sell signal in that corresponding stock. Now, a lot of traders say, well, Steve, what happens when the market stops going down? Can I still use strategy 4 for buy signals? Sure. For example, here are some examples that happened in the last couple of months, even when the market was going lower, where you could have taken advantage. Here's one in Amgen, or actually a couple of in Amgen. A buy signal here, we could have potentially captured 37 points. That was in August. And then just a few weeks ago, a buy signal where you could have potentially captured 18 points to the upside. Here's another example, an INTU, Intuit. Going back to July, 2 buy signals, and then look at 60 points to the upside. Another buy signal here in mid to end of August, 68 points to the upside. So yes, you can apply them for up markets. So when we get out of this downward phase, sure. So that's the beauty of strategy number 4. It's extremely transferable onto what the market wants to do. As you noticed here, let me just backtrack. Both of these buy signals, where was price? It was above the 50. So that's why we're going to only take buy signals if bars are above the 50. And look at INTU. This is how powerful this simple tool is. You can start using this as early as you like. But let me share with you what you could have scanned for just a few days ago, a little over a week ago. If you had scanned for strategy number 4 sell signals, you would have seen that a sell signal was generated on the 15th, just about 7 or 8 days ago in the spiders. That's the ETF that represents the S&P 500. Now, if you're getting a sell signal in the ETF that represents the S&P 500 index, doesn't it stand to reason that the market wants to go lower? So this was your sign that the market wanted to go lower. And look what happened. This is up until, I believe, yesterday, the market fell 18 points in the spiders, okay? Now that has represented over 1,000-point drop in just 7 days in the Dow. So even if you didn't trade the spiders, you could have used this as a market directional tool, telling you if a sell signal is generated in the ETF that represents the S&P, well, most likely the markets are going to be headed lower. Once again, no one called us up from the economic resources or from TV or from some other source telling us, hey, why don't you issue a sell signal because it looks like the market's going to be bad. We got all our information from the chart in front of us. That's the beauty of learning how to listen to the market. Remember, this just happened 7 days ago. Our students who took this are doing very well on the short side with the market right now. Okay, so how do you take advantage of becoming a student of mine in the strategy number 4 course? Well, let's break it down. All right, strategy number 4, the complete course and rules and manual, which includes a scanner, roughly costs close to $700, $695. Now, if we throw in 6 months of the PTS Primo charting platform, which is a $900 value, nearly $900 value, we're talking about close to $1,600, okay? So this is what it would normally cost you, but we're not going to charge you that. Remember, we're dropping the price, the $900, nearly $900 of the platform. We're only going to charge you $695 for strategy number 4. You're going to get a full 6 months free of the platform. You're going to save $882 or nearly 60% of the normal price. This is a great, great offer. Okay. Now, the way to put this together is to contact Pro Trader Strategies, because as it says here, you owe it to yourself to take your trading to the next level. The way to do that is to give them a call at area code 310-598-6677. And if you're still hesitant about signing up, or that amount, $600 is just a little bit too much for you, don't worry. They're flexible. They can establish a payment plan with you, or they can give you more information, but they're there to work with you, okay? Now, that link you see at the very bottom below the phone number is the link that will take you to the info and sign-up page if you'd like to sign up online. But remember, it's not a live link, so if you go to your webinar chat box, you'll see that there is a live link posted there. Just click on the little chat icon, and you'll see there's a live link posted in the chat box, okay? Now, I left this up here for you to copy down this information if you like. Remember, I would really highly suggest giving Pro Trader Strategies a call. There's absolutely no obligation. They're there to work with you. They give you more information, establish a payment plan if you like, or just fill you in about more information about tech support or even data services with the platform, okay? And I promised I would answer any question you have. So if you have any questions, just go to the chat icon or the question and answer icon. I promise I'll answer them to the best of my ability. Someone's saying, what if we have trouble understanding the pattern? Oh, you're talking about the strategy number 4 pattern. Well, each and every one of my students gets my personal email address, where you can reach me whenever you'd like. You can contact me either before the opening, after the close, I should say, on the weekend, or even during the trading day, and I'll get back to you as soon as possible, okay? Now, this to me is actually the best way to stay in touch, because I know so many times other so-called educators will give you an email address, and many times you're just going to an intern or to an assistant to answer your question. All of the questions go directly to me, so I will answer. No one else sees them, so there's no worry about your question being passed around. I'm the only one that sees it. And so this is a great way just to feel comfortable and to know that you're learning as much as you can, okay? So that's how we have kind of a mentoring correspondence. Someone's asking, how long is this deal going through? Well, usually they last roughly until about the weekend, okay? Or maybe possibly as late as Monday. But next week, we will be talking about an entirely different product. It may be close to $2,000. It may be the same price, but it'll be something different from strategy number 4. We have upwards of 10 different strategies for different market, different time frames, different ways to trade. So strategy 4 encompasses all of that. That's why it's one of the best of the best. As I stated earlier, this was the first strategy I learned 46 years ago, and I continue to use it to this day. So if I'm still trading with it, you can see how consistent this method is, okay? And I used it this morning trading the E-mini futures. So it's a really great method. It's a great way to become familiar and acquainted with us. And as I said, it's extremely simple to learn, okay? Any more questions? Yeah, the number there, 310-598-6677. Just contact Pro Trader Strategies. They're my sister site. You see, I'm in charge of all the teaching and education, but they're in charge of all the pricing. They're in charge of all the discounts. They're in charge of setting up a payment plan if you'd like to, and they can put that all together for you. There are trading consultants manning the phones right now. They'd be more than happy to discuss anything with you, take your order to the phone, or just give you a quote. So please don't hesitate to call. Please give them a call. They're very flexible. They're there to work with you, okay? Okay, if there are no further questions, as we close up here and take one last look at our disclaimer, remember, strategy number 4 is a great strategy. It's a perfect strategy to trade if we continue to go lower. But if we stop going lower and prices start going above the 50-period moving average, the beautiful thing is strategy number 4 can work just as well in a straight up market. You'll get signals all the way. So it's the best of both worlds. And if you like to trade multiple markets, let's say you trade stock, but also trade currency pairs, there's nothing you have to switch or alter because you're trading a different market or a different time frame. You can use the exact same rules. That's the beauty of strategy number 4. So as we close right now, I just want to say thank you so much for taking time out of your Wednesday to hear this. Thanks so much to the people on YouTube that are there also. Please click on the like button and subscribe to our YouTube page. And as we close, I just want to say thank you once again. But most importantly, I look forward to all of you becoming students of mine in the Strategy #4 course. Thank you so much. Have a great trading day and hope to see you in class. Bye-bye.